Hello, Kirk Spano here, retirement income options, stocks of the week, and macro dashes, all kind of mushed into one special episode regarding energy, the energy transition, climate change, carbon capture, everything that fits into that basket. I wanted to talk to you about some things that I think most investors are underappreciating. And at some point, there will be another round of major FOMO rallies, and this stock market correction that may have restarted recently, the bear market that I think we're still in, but I don't think is going to last forever, is probably the last best chance to get involved with a lot of clean energy stocks, a lot of cleaner energy stocks. One of those is one of my favorites, and I wanted to kind of point out some headlines today, show you a couple charts, a couple ideas that I hope really hammers it home for you. Because if you are not allocating a large portion of your asset allocation to this massive secular theme that governments around the world are trying to figure out quickly as we lose arable land, as climate change migration increases, as flooding increases, as dry conditions in other places gets worse. It really is a fast moving thing from the standpoint of the human life. From a geological standpoint, it's hard to pinpoint 100 years or 200 years on the timeline. But what we are seeing right now are accelerations in the rates of change in the climate. Now, does that mean that we're all going to die in 30 years because it's going to be too hot in some places and flooded in others? No, that's not what it means. What it means is that we are damaging our ability to survive. We are seeing a massive die-off of species around the world that has only been exceeded a couple of times from what we can tell. And it almost all stems from the waste, particularly CO2 and methane, from how we create energy and build and manufacture. So I just can't give you any more urgency than that, because the governments of the world, which is part of our 4-step process, analyzing where the government is sending money, are sending billions and soon to cross over into trillions of dollars into fighting climate change with the help of some of the polluters themselves. Recent conference, very simple conclusion: the world needs to move faster on energy transition. Well, we've known that since the 1960s, when we were first told by NASA scientists that something was changing and they couldn't explain it. And it took decades to really get the science in line. But 2 generations of scientists later, it's pretty clear, with something like 93% agreement, that man is causing climate change. Well, therefore, that means that man can fix it. How are we going to do that? If you read The Economist, they give you a really great synopsis of what's going on around the world. And there's other websites too, but you can get The Economist on special for like $200 a year. So this is one of the places to look. Bloomberg, obviously, we look at Bloomberg every day. They have a similar section that goes through everything that's being covered on climate change and the impact that it has in the financial markets. You can go to Bloomberg and just go to the word green. It talks to you about everything that you need to know, from carbon capture to hydrogen to change in temperatures. It is so much information that it's a little bit overwhelming. But I do encourage you to actually learn this stuff, at least on a level that helps you appreciate it, because I think this is the biggest secular trend on the planet, even more so than the 4th Industrial Revolution. Some of the supporting evidence is, if you go to their city lab, what you see is how cities are starting to fight climate change on their own. And clearly they ask for federal money, which affects you, income taxes. So when places like Florida build very large buildings a foot above the water line, and we know that the sea level is rising quickly now, that's melting from the ice caps and flowing into the oceans from rivers, mainly the ice caps. What happens when the cooling effect of the ice caps is gone And that's projected to happen by the end of the century. It's moving that fast. So we really have until the middle of the century to be roughly carbon neutral, to give the planet a chance to heal itself. We broke it in a few hundred years. If we go carbon neutral, hopefully it repairs itself much quicker than that. Who's on board? Your sinners. Your sinners are repenting. Chevron accelerates lower carbon ambitions. Chevron and Exxon all over the world, from the United States to Indonesia to everywhere else that they operate. The problem is that what we hoped would be a savior, simple carbon capture, is a little bit more expensive and harder to do than we thought. So what did the government do? At the behest of the oil majors, the last tax bill, Inflation Reduction Act, was written in a way that made it profitable by about double to triple, to do carbon capture. The companies, as those of you who watched the video before we started, should have realized is that if you make it profitable, it'll happen. So the government is shoveling billions and billions and billions of dollars to make sure that carbon capture happens, because the scientists are convinced that simply going carbon neutral is not going to be enough, and it's not going to be enough fast enough. What we're really trying to do is have at least a large part of the energy industry be carbon negative through the use of carbon capture and biofuels, and a major shift, obviously, to electric vehicles, clean energy production, hydrogen, and fixing the industries that are the biggest polluters. Concrete, one of the biggest polluters. Bill Gates has thrown millions of dollars at trying to figure out how to cut concrete emissions by 90%, and they're on their way. So there's a whole range of investing that can be done. Today, we're going to focus on the energy component, but whether it's manufacturing or building, concrete as an example, there are a lot of ways to help move towards carbon neutral, and maybe, because we might need to, towards carbon negative if the environment really starts to shift on us in the next 20, 30, 40 years. And again, all the curves, think of it like an S curve. We are at an inflection point and have been over the last 10 to 20 years. But if you take a look at what the weather was 20 years and 40 years and 60 years and 80 years and 100 years ago, and you start putting that on charts, which are all over the place to look at if you want to, right? GTS, Google that shit. Although with Chat GPT, maybe it'll be Bing that shit soon. The environment is changing. It's happening quick. It's our fault. And the governments know it. Exxon, Chevron, the other oil majors know it. They asked for money to help clean up the mess that they created, and they got it. Now, some of the problems jump out at you when you study this. Oil company profits are at record highs. Joe Biden complains about that all the time, but the reality is without them being profitable, they can't fix things. So Joe Biden complains about it out of one side of his mouth, and on the other side, he gives them tax credits to do carbon capture. Now, Congress tried to rein in buybacks by putting a 1% tax on them. And yet the executives at these companies, because that's where their bread is buttered, still are doing massive buybacks. As an investor, that's good for you. As a citizen, probably not. At some point, and folks who have been around for 4, 5, 6 years now, when I say something like this, how often does it turn out wrong? At some point, executive compensation in the United States is going to get some tweaking, not twerking. Executive compensation is going to have some new rules slapped on it, probably this decade, and probably in that 25, 26, 27, 28 range, or whenever there's another crisis, some huge wave of tornadoes that's unusual, or hurricanes, or tsunamis, or a million more immigrants on our border, who are largely moving for two reasons. One, oppression, and two, climate change. Can't support themselves, right? Their farms are not farmable anymore. So why are oil company profits challenged going forward? Well, they don't go through everything here in this article, but the reality is that oil and gas are getting harder to get to. And with the shift to clean energy, these companies don't have a great plan. They haven't gone out and bought solar companies yet, or battery companies quite yet, little ones, but they haven't made the shift really quickly. They know that they're vital to the economy, and they're kind of holding us hostage, hence why they got huge tax breaks for the carbon capture. But remember, panic pumping is coming. It'll happen as energy companies and nations that have oil and gas realize that the export markets are going to flatten and then turn over, first oil, then natural gas, over the next couple of decades. So while LNG exports right now are a great idea and will be probably for 20 years, eventually that changes to hydrogen, which in many cases can be produced locally. So you'll just need somebody to operate the infrastructure. Almost every company out there that's an oil or gas company, and I've made this point before, if they don't have a transition plan to hydrogen, something to do with carbon capture, cleaner energy in general, they are a dinosaur waiting for the asteroid. When will the asteroid hit? Again, oil companies, probably about a decade out, give or take. Natural gas companies, about 2 decades out, give or take. But if institutional investors know that's coming, they'll start selling those stocks. And at some point, they may sell those stocks faster than the companies themselves can buy the shares back. If executive compensation changes, if they double the buyback tax from 1% to 2%, which I think is for sure going to happen in the next few years. So these companies, which were not prepared for the shift to clean energy, mainly because they created bad science, right? They paid off a handful of scientists to say the climate change wasn't real. We know that happened. And now engine company one finally gets Exxon to start to act a little bit more responsibly. Chevron is just better managed. So they figured it out. They better start moving or they're going to get held to the fire. And there's no telling whether or not Exxon and Chevron just get sued into oblivion like the tobacco companies. I think that's coming too. I think there's enough evidence to prove that Exxon and Chevron have manipulated the system, that they've lied, they've cheated, they've stolen, they've oppressed people in other countries. And there's probably a day of reckoning coming in court for Exxon and Chevron. And that day will come at about the point that we need them less. What 2 years do we really keep talking about being the inflection point where all of these companies better have atoned for their sins? Where is the big inflection point on car sales to EVs? No, not 2030. Been saying 2026 into 2027 for 3 years now. Everything is on pace for that. Ford, GM, Volvo, Volkswagen, they're all on pace to be producing more EVs somewhere in that 2026 to 2027 window than ICE vehicles. You're going to see roughly 50% of cars being sold, crossovers, the smaller stuff, be EVs in just 4 or 5 years. I don't think we get to 80%, which is the administration's goal, but it'll be a lot closer than people think it was going to be. You already have EV pickup trucks coming out that just blow away internal combustion engine pickup trucks. They do. They just blow them away. So unless you need Super Duty, right? You need diesel to really haul something, which is a small fraction of the pickup trucks. You're going to go to an EV, especially with these tax breaks, imminently, as soon as they can produce enough of them. Ford is fixing some problems right now. It's going to take them 2 or 3 months. They say 2, I'll say 3. And all of a sudden, these pickup trucks are going to be 30 pounds lighter, more efficient, get better mileage per charge. And if you actually run tools off of your truck, or you'd like to, the hybrids already are worthwhile for you. But the EVs, like I said, unless you're hauling a big load, the EVs make tremendous sense. And given that one of the big ways to reduce climate change is to essentially retrofit every building in America that hasn't been already to be more efficient, there'll be a lot of guys out there using tools, especially when we allow immigration for real. Again, I talk about complex things and I try to make them simple. I know that I fail quite a bit, but the shift in the world, if you drive around the country like I have, or you go to 10 or 12 cities a year like I do, you can see it. It is right in front of your eyes. You want a simple one? Drive through some farmland and count the solar panels. Go by a shuttered nuclear power plant, count the solar panels and windmills. Go to a military barracks. They all have solar panels now, all the new ones. It's coming fast. You better be buying in, and you better be buying in with both fists the next time this market takes a digger. And if somehow we are in a new bull market, I don't think we are, but we could be, you better buy the dips. What's going on that really affects a lot of companies? Mergers and acquisitions. Today we found out that Travel Centers of America, company that I told you to buy when it converted to a C Corp a few years ago at whatever it was, $8 a share. Got bought out by who? An oil major. Why? To add to its EV charging network. That's why I've been so interested in truck stops. That's why Warren Buffett, right, bought Flying J, Pilot Flying J, which had been a merger. Flying J and Pilot were separate. They merged. Warren Buffett bought it. Love's is another big one out there, and they're getting into natural gas through a company called Trillium. And they're big in California. Keep that in the back of your head. But people say, yeah, but all the batteries, we're not going to have enough lithium. And I've told you what? What's my answer to that? It's a farmer's word. Bullshit. There is more than enough lithium. Argentina just had new mines open and more coming on. It's all over the planet. India just found a big deposit, and there's certainly several more in the region. Goldman Sachs is saying that there is no lithium shortage. They just have to develop the resources over the next 5 to 10 years, which they will. The permitting is all accelerated. The government funding is there. The private funding is there. Institutions want in on this, and it's coming. By 2030, we will have all the lithium we need. The two ramp-ups, the ramp-up in EV production and battery production, along with the changes in technology to make both things more efficient, are ramping up rather parallelly to lithium production. So while the demand is going up, so is the supply. So what company would benefit from a lot more charging? One of the companies that we've been in and out of over the years has been Tesla. I think we've won every trade. And now it's time to start thinking about, are the long-term projections for Tesla coming from Cathie Wood and others, Goldman Sachs included, right? Is Tesla going to be a gigantic winner? Well, what did they do today or yesterday? They unlocked a large portion of their EV charging stations to the public, to other car makers. Not all of them, but the ones where I think there's demand and there's enough capacity for Tesla drivers to have some advantage. This chart includes the ideas from other traders. What you'll notice is that the bullish and bearish ideas pretty much track the price. And what you're seeing are the extremes. So when I was saying that Tesla could get down into the 40s, there were some people who were saying the same thing. This to me looks like a 5-wave down, and Tesla might have put in a bottom. Not sure. I've asked Shooter for some input here, but it's running into resistance right now. And if it doesn't go through this area about where it is now, it'll turn down. My question is it going to go real far down, or is it just going to be kind of a pause that refreshes? Is it now in a new bull market, or is there one more big leg down? Hard to know. A lot of tax credits out there are going to help Teslas keep getting sold. And the new revenue from charging that's going to be coming in a few years, the market might price in ahead of time. Typically with Tesla, everything is priced in ahead of time, except when he buys, Twitter, and he sells millions and millions of shares, which he says he's not going to do for a while. So we'll see. But Tesla is one that I'm keeping an eye on now. I would for sure buy it down here. I'm not sure if I'd buy it on a smaller correction because the valuations are still silly. Global cellulosic ethanol market is going to grow by 3 billion over the next 5 years. I think that's light, given that the oil majors all over the world are ramping up production. And I had a list of like 30 of these just to make a point. It's all over the world. That's why I used Eni. Eni also bought into a joint venture for biofuel, ethanol, jet fuel down in Louisiana, putting in $1 billion. M&A in 2022 and 2023 really started to shoot up as Chevron, I believe, bought 2 biofuel refineries, and there were all sorts of other deals as well. Essentially all, I think almost all, of the independents and the small refiners, especially the ones that are in good agricultural places, are going to get bought. Why do I say agricultural places? Because smart agriculture takes the waste products, whether it's actual bullshit or corn stalks or trees from orchards, and they can turn it into sustainable aviation fuel, jet fuel, biodiesel. They can capture the natural gas, the methane that's thrown off from the cows. All the technology is there. And while it's not the most profitable stuff, it's as profitable as anything else in refining, except for maybe plastics. I think there was a movie that mentioned that 55 years ago, right? One word, plastics. And that's changing too We'll talk about New Light Energy someday because I think I might have found a way to get invested. Think about the M&A that's coming. Think about the development for energy around agriculture. And America is an agricultural leader. The world's going to need our food and Canada's food. So there's going to be more waste products because you're probably going to see even more agriculture in the United States that's set up for export because a lot of the produce type crops are going to be grown indoors. That's all coming. It's been coming for a long time, and we're hitting those inflection points. How do I know? Plenty to read out there, but those of you who were hanging out with me last summer know that I almost bought a golf course to turn it into greenhouses and condos, right? Got to have the condos. Ametis, we were just looking at the video for their 5-year plan. Here's their 5-year plan. I really think that you should take a look at it. The dairy renewable natural gas, the renewable jet fuel. This is a legacy business for them that'll convert probably to jet fuel at some point. The biodiesel in India, which is probably going to be monetized. This will probably be their M&A deal. Little Birdie told me so. I don't cite the Little Birdie often, do I? Worth between 500 million and 900 billion. If they get 900 billion, it essentially pays for all their capex, all of it. If they get 500 million, they still have to pay off some loans. And then carbon capture. Now, the positive of carbon capture is that it's good for the environment. The negative is that it's hard to do. But the tax credits make it profitable again. Without the tax credits, you probably wouldn't see a lot of carbon capture. But with the tax credits, everybody wants to get in. The oil and gas companies that don't go after that are going to sell when they realize that they don't have the capital to get started and catch up. Somebody points out in the chat that we're probably going to see triple the number of chargers for cars in the next several years. Yeah. And you're not going to get your electricity for free. What you're going to do is you're going to get your electricity cheap, and then they're going to make money on that soda that you buy and the burger, the sub or the salad or whatever you sit there and eat for the 20 to 30 minutes that your car is charging in their ports. Travel Centers of America saw this. I saw it, told you to buy that stock. You know, I sold it on a big rip. Well, we make 300 or 400%. You could have doubled your money again. I don't know if anybody held on to it that long. In hindsight, we should have. Now that one's off the list. And I will tell you, the hedge fund that I'm starting is going to have a sleeve for between 20 and 40% alternative assets, which is similar to what big endowments at the universities have, between 20 and 40%. And one of the things I would look to invest in would be truck stops. They're wildly undervalued, especially the private ones. A lot of them are just family run. They own 3 or 4 or 5 in a state. You know, putting those together into a group and then repackaging it for Chevron or BP or Exxon or whoever, Tesla, be pretty profitable. By the way, Ametis has a deal with a company called Trillium, which is owned by who? Love's truck stop company. So Ametis will be supplying renewable natural gas to Love's natural gas distributor, which, sells it to the Love's truck stops. You just saw that it's already happening, that those types of deals are getting bought by the majors. Private equity firms are going to want to get into this too. So Ametis has another monetizable asset. And it sounds like they already have the investor lined up. I don't really know how that works out. I don't know how the moving pieces work. Let's take a look at that Tesla chart again. Just wavy down. Let's take a look at the Ametis chart. Spike, and then pretty clear downtrend. What does it look like is happening right now? If you've ever looked at a chart, what does it look like is happening right now? That's right, it's forming a base, and it's already inflected up. So while it could come down here again into that $4 range, here's a transaction that I have pending. I'm trying to get $1 for the April $5 Ametis puts. Ametis is already my largest position for small caps. In fact, at about 4% to 8%, depending on the account. I'm selling puts, not because I think it'll get put to me, but I can make 20% in income on this, give or take. So sell the April $5 puts and hope that this gets put to you. If you don't have a starter position, skip the starter position and go to a half position or a full position, depending on whether or not you're selling puts. I'm at a double position and I'm willing to get a little bit bigger. I'm trying to make you a lot of money here. Just like I was right on Travel Centers and a whole bunch of these small cap stocks that are really, a lot of them are forming this type of a base right now that, we bought them a little too high. But these bases here, if you waited, if you were slow to move, then great. Now speed up. This company has so many assets that it can monetize that the folks, and I respect everybody who's told me this, there's about 5 of you, that you're worried about the financing. Don't worry about the financing. They have to sell something, they will. They're trying not to dilute, and they're trying not to sell off assets. To me, I would sell off the India asset and keep as much of everything else as I can. That's how I would do it. But if you were just watching the CEO, he's a pretty smart guy. Started an ethanol company, got most of his shares at $1, didn't really do any of the freaky option stuff, just bought the shares, right? He was the founder of the company, and he finally sold it at like $44. He personally is backing some of the private equity loans that he has. Kinder Morgan, another company we like. Why? Carbon dioxide, biggest transporter in the country. And natural gas pipes, unlike oil pipes, natural gas pipes can be converted to hydrogen. Oil pipes would have to be rebuilt completely. So they have a lead, right? They are number 1 or 2 in fuels. They don't do much raw oil at all, except out of Texas. And I think that they are ripe to merge or be bought out. I don't know if Richard Kinder intends to die with his shares, so he gets a step up in basis, which would be gross. Shouldn't be allowed, but maybe that's what he's doing. Maybe he's waiting to die, and he's an old man now. Then his family will inherit all those shares with a higher cost basis. And if that's what happens, I'm sure they've been told to sell. Berkshire Hathaway is a natural buyer here. Natural buyer. So I'm just going to hold this stock until Richard Kinder dies. I'm pretty sure that's what he's doing. And he just keeps buying the shares up. Occidental, it's going to end up being Berkshire Hathaway's eventually. So that can't hurt you. If they end up buying it for cash, you win. If they end up buying it with shares, you win. If they end up buying it with cash and shares, you win. There's almost no way to lose with Occidental. The warrant price is in the middle, not 59s, 59.65 or something, 65 cents, $59.65. I'm within 50 cents. So I keep selling puts with a $60 strike price every single time I can. You can do that right now. It's down a little bit on this little mini correction that may or may not be another leg down in the bear market, but you can sell these puts right now into the spring sometime, April, May, pick one. Just keep selling those $60 puts. Just keep doing it. And it's okay to do it to a double position size. Why? Because there's almost no risk. There's almost no risk. They're pumping out huge profits. They're wiping out their debt. They're buying back shares, and Berkshire's buying the rest. This is going to be a private company someday, so collect the premiums while you can. And then one of the other companies that we're into that I'm looking for a dip to add more of this, New Fortress Energy. They have the very unique liquefied natural gas loading at the wellhead on the ocean. It's called FAST. They're the only company in the world that can do it. They take a ship out. It's essentially a liquefied natural gas facility. They pull the gas off the rig, turn it into liquefied natural gas, put it on a ship in the water. So it doesn't have to go to land to be converted. And they have all sorts of contracts for more of these. They've cut a couple deals in the Middle East, North Atlantic, Caribbean, Gulf, and right here, they're a transition play into hydrogen as well. Plug power, right? They're building the infrastructure for hydrogen. I know that it's hard to see because this stuff is, on the hydrogen, it's 6, 7, 8, 9, 10 years out. But as there's enough electrolyzers hitting the market, Plug Power is one of them that's making them, you're going to see clean hydrogen hit hard for shipping, eventually jets, but, you can't just put it into the jet engines of today. You have to replace them all. That'll take a long time. It's one of the reasons I like Boeing. We'll probably buy Boeing if we get a good price. Don't tell anybody, because this is the holy grail. If we can use carbon-free energy, solar, into a battery with better technology, notice what the Ford plant is doing, the one they just announced in Michigan. A lot of them are switching over to the iron-based lithium batteries. And then you've got Enovix, which I haven't mentioned today. The batteries that you think about today are really what's been out there for a while, right? You're looking back 4, 5, 6, 8 years, batteries. Oh, they don't go very far. Oh, they wear out and you have to replace them. There's virtually no battery going into a car that you'll ever have to replace right now. It's true. Unless you keep a car for 500,000 miles or more for a long time and subject it to extreme cold on and off, right? In Canada, maybe somebody has to replace a battery someday. But the batteries being put in cars today will never have to be replaced. And the batteries in the cars from 5 to 10 years ago, right, those beta versions of EVs, even those haven't been getting replaced. I mean, they first told you they'll last between 5 and 10 years, and it's turning out they're lasting longer. So a lot of the things that people think, right, a lot of the knucklehead arguments that you're going to hear over and over again, and you start to wonder if they're true, they are in fact bullshit. There's no shortage of lithium. The grid is being built to handle all of this. I know, I get to watch it being done. One of my best friends is in the industry. So the transmission system is going to be in great shape over the next 10 to 15 years because the government's throwing a ton of money at it. If the government is throwing literally trillions of dollars around the world for clean energy projects, what does that tell you? It could just be a way of building something new to stimulate the economy. So what? Or they could be really scared. There's something called the Quadrennial Report put out by the Pentagon. And over the last 20 years, since George W. Bush, they have been forecasting massive migration due to climate change. And nobody's been preparing for it, especially the Republicans in Congress. They don't really represent you. Remember, I say this as a guy who worked for a Republican presidential candidate named McCain. Joe Biden keeps talking about getting government to work together. And I'm no apologist for the Democrats either, because I think that they've screwed up a lot too. I think they're less thievy, if that's a word, but none of the politics are going to change the fact that the military is telling you climate change is a threat. None of it's going to change the fact that somehow all kinds of money got passed to fight climate change in many countries, not just here, and that this secular tide is not going to change with any one election anyway. You could get 100% climate change deniers in the government for 2 to 4 years, and it still wouldn't change the momentum because the problems are that apparent already. And the corporations have allocated the money already, and they know that with any swing of the pendulum in politics, they could get sued into oblivion. So these trends are forever. They're only going to get faster and stronger, and you need to be in them. I can't make it any stronger. I used extra swear words today and everything. Somebody mentions MP Materials because of the magnets. Yep, absolutely. There's a bunch of companies out there. That's why I like PBW, the ETF, a lot of small companies. You can certainly trade Q-Clean because Tesla's a big component, so you can kind of use that instead of Tesla if you don't want to own Tesla proper. Although I will tell you, I'm very likely to buy Tesla if I get a price because I want part of the SpaceX spinoff whenever that happens. Somebody asked, does MP do some mining? Well, yeah, they own the biggest. Look up Mount Pleasant. But where they're going to really make a lot of money is processing. So MP is going to make a ton of money processing the materials that normally go to China and then come back. And there's 2 other processing plants getting built. So pretty soon the rare earth metals processing, well, I don't think you ever get completely away from China. You don't become outright dependent on them like we've been borderline for a while. So take a look at the holdings in PBW, in Q-Clean, depending on what market cap you want. Take a look at ICLN, that's global. A lot of those companies are worth buying on the dips. Now, it's easiest just to buy the ETFs, but if you're a little bit tradey and you want to utilize the high volatilities in those industries for now until the FOMO starts, the premiums are huge for selling puts. Huge, just huge. And that is a great way to get through this bear market, is to sell puts on the stuff you want. Some of it will get put to you, some of it won't, but you'll get your starter positions and your half positions and your full positions along the way. If there's bigger corrections, then you just outright buy. But as we've seen since the October low, which may or may not be the absolute low, the small caps and mid caps have started to outperform the large caps. And there was an article, and I showed it the other day, 1/3 of the companies in the S&P 500 have big debt problems. Remember when I said somewhere between 100 and 200 companies in the S&P 500 just were getting blown out by my screens? Yeah, well, now it's official. Main Street Media says I'm right. So does Bloomberg, so I at least trust them. All right. I hope you understand what's happening and what's coming. I encourage you to get on the Google machine, visit some of these sites, especially Bloomberg Green, or if you have a subscription to The Economist. You know that I do recommend that everybody have a subscription to Bloomberg. Everybody. If you're not reading Bloomberg, you should not be handling your own money. It is that simple. I don't get $1 for telling you that. If you don't have a Bloomberg subscription and you're trying to manage your own money, that's kind of bullshit, right? So, all right. Somebody mentions that they also get The Economist and Foreign Affairs. Foreign Affairs is dirt cheap if you really, really want to know what's going on around the world. And they have all kinds of economics topics in here. Subscribe to The Economist, $45 a year. I get the print just because I like the little blue magazines. I've been reading them since college. It's no joke. I've been reading this publication since college. I just turned 53. So it's a long time. Save $6 and not get the 6 print issues a year. But those print issues, you leave them out. It makes you look really smart. I'd probably get this one. All right. Have a great day. I'm going to publish a macro dashes today that talks about the Fed and talks about inflation and all that good stuff. But I'm going to tie in the fact that it really could be an energy shock that drives inflation back up and stalls out the fall in inflation, the disinflation, right? Chairman Powell said disinflation 13 times. Disinflation, 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 disinflation. I don't know, lost track. An energy shock or energy pressure could cause inflation to stay higher for longer, which is why not only are they talking about a 0.5 point increase again, that happened today, but what was the strategic petroleum news that you just heard about? They're going to send out 26 million barrels into the summer. They didn't have to. It was on that schedule that Congress set up years ago. And rather than getting rid of it, they're going to do it anyway because the administration didn't ask to get rid of it. So there's actually going to be 2 pieces of oil coming out of the SPR, I believe, this summer, and another one is scheduled for next summer, which is weird that that's when they're scheduled for. I think it's just coincidence, unless they were able to forecast the future before COVID. And if they pulled that off, then that kind of makes you wonder where COVID came from. In any case, it came from China. Come on. It came from the place where they were studying it. All right. I don't want to go all Jon Stewart on you. All right. Have a great day. I don't care if you vote Democrat or Republican, by the way. Just don't vote for morons and thieves. I know that's challenging because sometimes you have a moron running against a thief and kind of screwed either way. But you need to get into these companies. I hope you watch this and then read the report. What you will find out about Ametis is that not only are they probably going to succeed on their own, but they have assets to sell, India, and assets to do joint ventures on renewable natural gas. And it's all in the works. I will be speaking to him and hanging out with him in May. I'm going out to San Francisco and wine country afterwards. And one of the days I am meeting up with this gentleman and his brother, who is the CFO. To those of you who live in that area, there's 3 of you that I'm visiting. I will check to see if you're welcome to come and visit with them as well. So I will see if they're okay with that. All right. Have a good day and a good weekend. And I've got macro dashes coming out. I've got stocks of the week coming out over the weekend and the monthly options expiration coming out this weekend. And we will see where we go. And be careful out there, because if you're not focused on the right things, I'll tell you what, if you're too S&P 500 connected, you better be careful, because a third of those companies in the S&P 500 are going to drive the whole index down. And while the traders are still strong, just understand volatility is starting to tick up. I put some posts in one of the chat rooms on that. 50 Cent is back. If you know who that is, great. If you don't worry about it. And if volatility goes up and momentum shifts down, then all these new traders the last few years are going to head down. I warned you about that a year and a half, 2.5 years ago. It's been a long time. I think it was fall of 2020. I wrote the article about, will the millennials become good short sellers? There you go. Will young traders flip the option switch to cause a crash? Remember in 2020 and 21, they were pushing everything up. But if they're using options, they've probably learned about the other side. So they can push things way further down than you believe. And I've told you, the millennials are pretty good traders, at least compared to other generations. Doesn't make them good, just makes them better. So I go back and read this article, because, in fact, I should rewrite it and update it, because I think it's about to happen. All right, take care.